Hey everyone! Welcome back to the Investing Blueprint. If you're into stocks, chaos, and a little bit of drama, you're in the right place. Today, we're unpacking the absolute roller coaster that was February 2025 in the stock market. We've got Trump shaking things up, Tesla taking a nosedive, and enough turmoil to make your head spin. This month was wild, and I'm breaking it all down for you, plus what it might mean for your wallet. So grab a snack, hit that subscribe button if you haven't already, and let's dive in. Picture this. February 2025 starts with a buzz, what analysts were calling the Trump bump. After Donald Trump's big election win back in November 2024, Wall Street was riding high on promises of tax cuts, deregulation, and pro-business vibes. Investors were hyped, thinking this was the golden ticket to another record-breaking year. But here's the thing. Hype doesn't always last. By the time February wrapped up, the major U.S. indices were looking rough. The Nasdaq? Down nearly 4%. The S&P 500 took a 1.2% hit. The Dow barely scraped by with a 0.2% dip. And if you're into small-cap stocks, well, I'm sorry. The Russell 2000 crashed over 5%. Oof! So what the heck happened? Let's zoom in on February 28th, the last trading day of the month, because it was a microcosm of the whole mess. Markets opened shaky after Trump got into a public spat with Ukraine's president, Volodymyr Zelenskiy. Something about trade deals gone sour and some choice words exchanged on X. Investors panicked, thinking geopolitical tensions were about to spike. Stocks were sliding fast, but then, bam! A late rally saved the day. The Dow shot up 600 points after a report dropped, showing inflation was cooling down, right on schedule. That's the kind of news that gets Wall Street dreaming of Federal Reserve rate cuts, and traders jumped on it. For a minute, it felt like the Trump bump might still have legs. But not everyone was popping champagne. Tech stocks? Total train wreck. Nvidia dropped a killer earnings report, beat expectations, crushed revenue forecasts, but the stock still tanked. Why? The AI craze that fueled 2024's gains was losing steam. Investors were like, okay, we get it, AI's cool, but where's the next big thing? And then there's Tesla. Oh boy. Elon's baby slumped 16% in the final week of February, its worst stretch since December 22. Part of it was a brutal 45% sales drop in Europe. Turns out tariffs and a slowing EV market hit harder than expected. X, was ablaze with Tesla fans crying foul. But the numbers don't lie. Now let's talk Trump's fingerprints on all this. His tariff threats were back in the headlines, rattling global supply chains. He floated a 25% tariff on Chinese imports, which had everyone from Apple to Walmart sweating bullets. Then there was his surprise move to cancel oil licenses in Venezuela. Something about teaching them a lesson. Energy stocks wobbled, with Exxon and Chevron seesawing all month. Add in a weakening consumer confidence report, down to its lowest since mid-2023, and you've got a recipe for jitters. Big retailers like Walmart and Target didn't help, warning that 2025 sales could flatline as shoppers tightened their belts. Investors heard that and ran for the hills. Oh, and here's a wild subplot. On February 28th, a grassroots movement called the People's Union USA kicked off a nationwide boycott of Amazon and Walmart. They called it Price Hike Payback Day, accusing the giants of gouging customers while profits soared. X posts went viral. Millions of likes, thousands of memes, and some analysts think it spooked retail stocks even more. Imagine the optics. Empty Amazon carts trending while Wall Street's trying to rally. Unreal. But it wasn't all doom and gloom. Let's flip the script for a sec. Overseas, European stocks were flexing. The STOXX 600 was up nearly 10% year-to-date, shrugging off US drama like it was nothing. Chinese markets held steady too, thanks to some smart stimulus moves out of Beijing. It's almost like the rest of the world was saying, America, get it together. Back home, though, the volatility had traders on edge. One day, you're up 600 points. The next, you're down 300. It was exhausting. So, what's the big picture here? February 2025 felt like the market hitting a speed bump after 2024's joyride. Some experts are calling it a healthy consolidation, just the market catching its breath. Others think it's a warning sign. If Trump's policies don't deliver fast, that bump could turn into a bust. Picture this hypothetical for a second. Say Trump doubles down on tariffs in March, and China retaliates with a rare earth export ban. Tech stocks would scream, and we'd be off to the races again. Or maybe inflation keeps cooling, the Fed slashes rates, and we're back to record highs by summer. It's anyone's guess. Here's my take. Volatility's not going anywhere, but there's opportunity if you're paying attention. Are you buying the dip on Tesla, holding cash until the dust settles? Or maybe you're eyeing those European gains? I want to hear from you. Drop your thoughts in the comments below. And hey, if you like this deep dive, smash that like button. It really helps the channel. And subscribe for more market breakdowns. We've got a crazy year ahead, and I'll be here to unpack it all. Thanks for watching the Investing Blueprint, and I'll catch you in the next one.